All right, everybody, welcome to the end of August. End of August HPT webinar. Okay, so this is a mentorship webinar, and basically the purpose of these webinars is to make sure that you are properly identifying good opportunity. Okay, every single week, and it seems like as these weeks go on further and further, that the conditions are just getting a bit more volatile, super erratic, not exactly easy. I mean, look at this on Monday. Okay, this is Monday's PA. I mean, just absolute garbage. Like, absolute garbage. And if there's anything that we can take from this week, is that when conditions are fruitful, you have to make sure you are eating. You got to make sure you're making money on days like Wednesday, okay? Wednesday, days like Thursday, all right? Trending days where just markets just rallied, okay? And then the importance of actually executing when our edge is there, okay? Here's a perfect example of it right here, that short play that we caught on the live, okay? Because 95% of the time, it feels like the market's this. Absolute trash. And what we do on days like this, right, and markets like this, and how we behave in conditions like this are going to make the difference at the end of the week when you're actually looking at how well you did. So I'm just going to ask everybody to make sure that their mute is on so we don't hear everything else in the background. And of course, if anybody has any question or a comment or something they want to go over, in the meantime, feel free to then unhit your mute. Otherwise, I'm going to have to mute you for you. All right. Thank you, guys. All right. So let's break into this. All right. So Monday morning, price action. I mean, look at this. It was absolutely terrible. It was absolutely terrible. And this has been the story of this week, other than a few days, right? And I'm actually, in a way, there's a big benefit to it, because it kind of brings us back to the correct expectation while trading, okay? Like, we cannot expect every single day on the market to be like Monday or like Wednesday and Thursday and Friday, where we got these beautiful moves, right? Like, yes, this is amazing and we love it, but it's not realistic to assume it's going to happen every day, okay? You're not always going to get these very nice trends, and we're not always going to get amazing, beautiful setups in the morning, which makes it even that much more important, though, that when these plays present, we got to be pulling the trigger on them. Like, we have to be pulling the trigger on these plays that we get in the morning when they show up, right? And, the big thing is learning to understand the difference, okay? And, there's a lot of people like, they get that trader intuition, this, that, and the third. But what I want to talk about is the truth of the matter, right? Like, what can we look for, etc. All right, so let's break right into Monday. Monday, I'm on the, let me whip up the 5 minute. This is the 4 minute right here. Let me whip open the 5 minute time frame, and then we can also look at the 4 as it shows up, okay? So this is what the market looked like on Monday morning. And initially, I actually wasn't extremely proud of the way I traded on Monday. So initially, we get this very large red candle right here, and it gets disrespected, right? Meaning the next candle breaks the high of it, all right? So this would then create what we like to call an area of value, all right? Now, yeah, you could go long here, but if you do, you have to be able to put your stop loss below the area of value, right? That's the concept. The concept is the RBI or GBI creates the area of value, okay? So a long play that I ended up taking was off open print, okay? So it was right here. You guys see here how we get this red candle, this red candle right here, and she gets ignored or disrespected by a couple pennies, okay? You guys see this, couple pennies. So when we see this, we now know that the seller that showed up here, okay, he tried, he put a lot into it, but the buyer disrespected him. So this is a sign of strength, okay? So if I was willing to enter into the market long, and my stop loss would go outside of this box, okay? that's how I approach this. And I was looking for a move. Where were we targeting? End of day, which was up here. So it honestly, like, this is solid criteria. It's just there was no moving average cross after 9:30. All right, so that's something that we can account for. It's not necessarily saying that you need one. All right, but just pointing out here, there was no moving average cross. Okay, no moving average cross, and a price tries to make its way up to end of day, and it doesn't follow through. All right, and it looked beautiful up until this candle. Now, what I really want to talk about, because this I ended up stopping out of this position right here, which I shouldn't have, and that's what I want to talk about. But necessarily, we hopped in this long, and when you're a trader, you're now introduced to a different sort of life, because you need to get good at being in a position where, let's just say you're up 20%, right? Say you're up $250 right here, and now the trade starts going against you to the downside. Okay, so you're up 250, maybe 300, and now you're down 250, or maybe you're down, I don't know, 100. I think I was down like $175 down here. Time decay was starting to chew me up, and I ended up stopping out of the position because I didn't want it to go into a further loss. I kind of talked myself out of this trade. Market conditions are bad. Oh, this, that, and the third. Talked myself out of the trade. Took the loss. Once I took the loss, this happened. Boom. Okay, so this is very important, guys. What about this should I have been looking at instead of focusing on red P&L? Okay, and the answer is very simple. It's called the area of value that was never disrespected. So, areas of value are the easiest thing to identify on a chart. All right, when you see an RBI, this is an RBI. It's an RBI because this candle broke the high of it. Okay, you draw a box around it. So this becomes your structure. This becomes your drawdown, your risk. This becomes the base for buyers, okay? Meaning until this box gets broken or disrespected by sellers, until sellers show up and just smoke the price outside of this box, this is still bullish, okay? This is very important. And even if you're not in a long, you still identify the box around the RBI, because look at the area of value. Look how it never got smoked. Okay, like this perspective, or whatever you want to call it, strategy or whatever, areas of value have been helping me so much this week. And that's what we're going to go over in this webinar today. Like areas of value, I just made the mini course on it, but like areas of value are so damn important because they help me filter out the noise. Like, yes, I'm in this trade long. Okay, I'm in the long play right here. I'm targeting end of day. Now, right here, things actually look pretty good right here, right? I'm kind of looking for another move up. The 1 hour trend was down here. So it honestly makes sense I didn't get it, right? And then this candle comes in and really shows a lot of strength, but it never invalidates the initial red bar that was ignored. Therefore, buying structure is still present. I had no business stomping out of this trade. Time decay was kind of chewing me up. I could have afforded it, and I chose not to because I was looking at the P&L instead of what the market was telling me. All right, and then the trade ended up going up. It was very nice. It was very beautiful. And then once again, though, right, like I just want to point out here, right here is another area of value. All right, where we get that red candle, it gets ignored, you draw the box around it. And now, once again, guys, just notice here, when you draw the box, look at the retest, okay? We're getting very nice retest right here for the move up into EOD, all right? So areas of value are very important. They're key. Anytime, I don't care if you're not in the trade, anytime you spot a RBI or a GBI, like this is a green bar, gets ignored, look at the retest, okay? It's clockwork, dude. It literally is a game changer. Even right here, right? You get a GBI, green bar ignored. Draw the box out. Look at these retests. Look at these retests. This is free money. That's literally free money right there. And it just really helps keep me focused on the information that actually matters. So Monday was pretty shitty. Tuesday was as well. But what I just once again, what I want to kind of point out here on Monday and Tuesday, Tuesday, is you'll notice two RBIs here. The first one here in the morning, all right, if we drew a box around it, look what never got invalidated, all right? Obviously, it's a pretty big box, but look at this one, okay? Here's another red candle that was ignored at or around open print. You draw your box around it, and then you're able to find some good opportunities to the upside, all right? Tuesday was just a trashy day. A lot of back and forth price action. Once again, no moving average cross. Kind of a pretty solid indicator that price action just wasn't being that fruitful. Overall, Tuesday just really didn't have that much good trading opportunity. Our strategy did present itself right here. You can see we got that nice bounce off end of day, giving us once again a RBI off end of day. And just notice here, guys, it never got invalidated. All right, so the key to this is really spotting these RBIs and GBIs and then drawing your boxes outside of them and then letting price either come back to these levels and trade off those and really just focusing on those areas of value. That's really been key. And these days are very important to you need to minimize how much you're trading. That's one thing I really wasn't proud of this week. I took way too many setups. I think I took 3 trades on Monday, and also on Tuesday I took at least 2 trades, and there really wasn't opportunity there. We got to be super careful not to be taking a loss and then trying to get back in, trying to make up the money. Like, there's a difference between executing on good opportunity and then just trying to end green for the day. Right? Like, and I think we've all been there, and I like seeing people on the Discord super disciplined. They're not taking that many trades. They're walking away. Like, that's the sort of shit that's going to get you across that next level, right? Like, and if you don't do that sort of thing, you're going to have to make up for that with a lot of profits, or you're going to find yourself in the red. I traded a little too much these 2 days. I was able to make up for it on Wednesday, Thursday, and Friday. Thank God. And now that's what brings me to my next topic of being able to really take advantage of these setups, right? Because these next trades I'm going to show you helped me out tremendously this week. The first one on Wednesday, this was a really good play. It was textbook. And the thing I'm very proud of and thankful, though, is that I didn't hesitate on this play. All right, we initially got a nice push up here on the 5-minute, and you'll see we get this red candle here that was disrespected. So I ended up hopping in the market long once this broke the high, right? I was just kind of, blown away that this red candle here, which looked really large, is only 60 cents, but I was really expecting sellers here to defend previous day high, and once they showed up, I was like, oh yeah, okay, there they are. Then we got this green bar just completely disrespecting that red, and I was like, all right, I want to take this long. All right, it happened at EOD. It gave us that moving average cross. So then at that point, I was like, all right, I'm willing to get in the trade. I probably could have waited, but you know what? Sometimes when you see it and it's there, it's present, you just want to get into the trade. That's completely fine. If your criteria is there, so be it. I made the appropriate risk. I was like, you know what? This is now my area of value. I can accommodate a stop loss down here. So I'm willing to get into the trade. Got a massive pullback. I'm like, you know what? It is what it is. I've already entered into this. Guys, one thing I want to do here, though, is just look. If I draw the box around the area of value here, just notice that this RBI never got invalidated. Okay? So once again, right? Like as price comes back later in the day, and bounces off this area of value, and you get another GBI right here, these are great longs, okay? This is a great long because it respected the area of value, right? The area of value, the previous RBI or GBI, previous day high right there, that's what gives the RBI and GBI the value, right? So back to the trade, though. Beautiful setup. It kind of felt like it was moving kind of slow. I don't know if it's because the market's just been super whipsaw choppy that when we finally get a nice day, it just feels weird. But another thing I want to point out here is that 1 hour trend. It really gave me a lot of, confidence here, because I was like, we're below the 1 hour trend. Okay. But if we could end up getting back above it here, I could see a nice move to the upside. Another thing I want to point out is look how flat the 1 hour trend was here. So all post-market and pre-market, I mean, this thing was pretty flat. There wasn't much movement on it. Usually that's a red flag, but the thing is we got so extended from it in the morning. So if the snapback came into play and we actually did get back above it, I was going to look to target all-time high, right? This was all-time high right here. So initially we're targeting all-time high. We don't get it. I trim most of my position right here, and I end up stopping out of my position right when we break the low of this red candle right here, right? So hold on. I want to make sure you guys see this. So when I enter into a trade, I'm watching the area value, all right? Now I'm in the trade. Then we get another RBI. So this becomes my next area value. So I draw my box, right? So now once price breaks out of that, I'm getting out of the trade. If the area value isn't holding, I'm out of the trade. I'm done. Ended up bouncing right off the 1 hour and the 20. But once again, if I'm trading SPX contracts, like I'm not willing to hold a 70-cent pullback to see if it goes further, right? Like I'm always evaluating. Am I willing to hold this pullback to the 20, right? Am I willing to hold it to the 2-minute 20 or the area value? Right, like getting into the trades half the battle. The next battle is, all right, how long do I want to hold it? I'm not gonna let the trade go against me 40% just because I missed my target by 20 cents. It is what it is. So we end up going into all-time high, and I just really couldn't find any good opportunity here. I was pretty much gonna just one and done it. I was gonna be done, unless something else popped up. I ended up going away, going to the gym. And then price comes into the area of value. Boom, we get the RBI out of it. And I'm not in front of my computer. I finally get in front of my computer right here. So on this trade, I want to break out the 4-minute. Because that's primarily why I got into this trade right there. This trade was a monster. This was, this guy right here. And you'll notice here, like look at this trade we're about to go over. And then look at Thursday's trade. They're pretty much the exact same entries, and I want to show you guys what I'm looking at here when I'm actually pulling the trigger on this. Because these are one of my best setups ever. Like these later in the day SPX calls that go up 150%, like that's how I make most of my money. Like most of my income from trading, it's literally coming from these later day moves, right? Like these later day moves, I'm putting up almost no money. I'm trading 0-day SPX contracts, buying them for around $500-$600, and then ended up selling them for $2,000. Like these moves have such little risk, such high reward. If anybody ever has any questions about like how I pick strikes on that or anything, feel free to message me. I'll show you. But basically, is what I'm doing is I'm watching the 1 hour trend. And I'm asking myself what the story is. So I got the 4-minute up. I'm going to make this chart a little bit bigger here. And notice the 1 hour trend, right? Like I was talking about before. We opened below it. Now we're back above it. I'm getting into the market right here. I'm leaving the gym around here. I'm looking at my phone. I'm noticing that there's some opportunity here. I miss my entry here. But once again, what do? I draw the box around it. So anytime I'm getting RBI or GBI, I'm drawing a box around it. Okay, this is the area of value. I'm looking for price to come back into it for a long. Okay, cool. Now, I get in the market on this candle. Let me show you why. So now we get another red candle right here that's ignored. So what do? I draw my box around it. The 1 hour trend has already told me that this is bullish. Like, we're coming into all-time high right here, and yeah, there is some selling, right? Like a lot of traders were probably looking for shorts. They're like, oh my god, look at all that red. That's out of all-time high. This thing's gonna reverse. No, we have to watch the 1 hour trend and be able to go, all right, this trend is healthy. We're not extended from it. It has a pretty high chance of a continuation. I just need to find a way to participate. I wanted to get in right here, but I didn't want to hold. I didn't want my stop loss to be down here. Okay? I mean, it's only 40 cents, but I don't know if I missed it or whatever happened, but I ended up getting into the market right here at around 120. And once again, it's just because I got an RBI, right? It's a red candle. The high on this is 64643. The high on this is 64644. So once again, this one penny was able to tell me that buyers had the ball right here. And it was bouncing out of the area of value. Okay, this previous RBI, right? So that's all I needed. A healthy 1 hour trend, a RBI out of an area of value, and I'm willing to target high of day and above. And this thing just really started to take off. I mean, solid trend to the upside. It was going super slow, super slow. But the 2-minute 20 continued to hold. Watch this 2-minute 22. This is actually crazy here. This was just like completely clutch. So we're in this long. We're getting this nice push here. We get in long right here. Bounce off the 2-minute 20 right here. Bam. So, and like, this is the thing, guys. I tell you, I care nothing about what the candle looks like. I only care about how it's respecting the moving average. Like, the market is designed to deceive the shit out of you. It is literally constantly, 99% of the time, it is lying to you. The other 1% of the time, it's respecting a moving average. Like, it's literally like, it's so crazy. The longer I trade, the more I go on demand, the more I study these candles. The first 99% of that candle is just lying to you. Once it really starts to bounce off the moving average, disrespect the previous candle, like, these are the tools I like to rely on. I don't care if it's pulling back to the 20. As long as I haven't got smoked out of my drawdown, my predetermined drawdown, I really don't care. Honestly, I like it when it comes and bounces off the 20, because then I know the trend is actually doing what it's supposed to do. Right? Like, I really don't have a problem with pullbacks to the moving averages as long as they're not too far away, because I know healthy trends are going to pull back to the moving average. Like, look at this trend right here. Yeah, it'd be cool to get in it, but there was no pullback. There was, it just sold off very quickly, which led straight to a reversal. Okay? So, like, if I'm not getting bounces off the 20, I don't even want to be in it. Because I know 9 times out of 10 it's just going to be some choppy mess. Like, I want to see the retest of the 20. I want to see it bounce off the moving averages. And then look at, like, this little fake out right here outside the 20. And then, boom. This thing took right off. Beautiful, amazing trade. Over 100% on that trade. Primarily because that crazy boost above all-time high right there. And then Thursday. So those two trades on Wednesday, really good trades. Thursday, I hopped into the market short. Once again, I'd probably take this trade again. It looked beautiful. I mean, this setup makes me a lot of money, and I've gone over this and re-looked at it. I mean, the 1 hour trend was probably down here. It wasn't that far away. We got a nice false break right here above all-time high. And then sellers showed up, pushing the market down. This is very bearish, okay? So I'm literally, price is coming back up to previous all-time high, and I'm getting an RBI, or I'm sorry, a GBI. This is blueprint short play targeting these guys, right? So, I mean, this trade just ended up being a loss. It is what it is. I really didn't, it kind of helped me understand that the market was being completely retarded. So it was probably a good idea to walk away, right? So I was like, all right, I'm going to take a step back. So I take a step back, and while I'm gone, the edge presents itself right here, right? We get that moving average cross. RBI right here. That would have been a great long play into open print and above. Ended up, this was a pretty nice move up, but like I said, I wasn't in it. I didn't get it. And the risk reward, honestly, wasn't that good there anyways, so... And then the market goes back, forth. There's nothing there for me. But you know what I'm doing is I'm looking at this and I'm going, all right, what's the story? So if I show you the 1 hour, and we're looking at this day right here, The 1 hour looks like this. So the biggest thing that helped me go long is when I was looking at this, I was like, okay, well, this chart on the left, hold on, I want to make this a little clearer for you guys so you really can see this. Let me take off, because this is very important. I don't know if it's just like me or how I've stared at these moving averages for so long, but all right, where EMA cloud's off. Okay, so look at this chart on the left. There's a few things here. We're bouncing off the 1 hour 50 multiple times. But the biggest thing I'm looking at here is notice how on this candle, we're closing below the 9. Now on this candle, we're actually closing above the 9. Okay? That is a massive sign that buyers are strong. Okay? Like this candle, closing below moving average. This candle, we're now closing back above it. The chances of seeing that and having no continuation is very small, right? And once again, this is like why moving averages are like, they tell us a lot more than what just meets the eye. Like we just closed well below it and we were a bit stagnant from it, so we got that snap back up. So at this moment, I'm looking at the market and I'm going, all right, how do I get in long? And initially, the 1 hour looks like this. It's starting to look like super bullish. And we get this very large move up, and then this happens. Now, this is what makes us at HPT different than everybody else, guys. Every other trader was going, wow, look at this selling, right? This selling's coming in strong. But we were going, look at the 1 hour trend, okay? The 1 hour trend is healthy. So I want to trade with it, right? When we got extended, we got to pull back. So now I want to see what happens here. Primarily because the 1 hour trend. Like, this is key, guys. Like, when you have this 1 hour trend right here, you're coming back in, price is coming back into it. I don't care if these red candles were $2 big. It doesn't matter to me. Candles lie to you. But the moving averages are going to guide you, okay? Like, it could get bearish. It could. But it ain't right now. And the only reason is because we're above that 1 hour 9 and it's close. So now I'm going to go and look at how fast we sold off into it. This is straight bullshit. There's no structure there. Like, if there was structure there, then maybe I'd be like, okay, maybe if we got like, hold on. Maybe if it looked like this, right? We got that red candle. Maybe if we get a green candle, and then if we get one of these, then I'll look for a short, okay? But until that happens, and until it happens below the 1 hour trend, I'm bullish. So price comes into it, bounces into the 1 hour, bounces off PDH, bounces off the 20, bounces off the 20, bounces off the 20, and then we get a red candle right here that's disrespected. Right there. By 6 cents. This candle beat that candle by 6 cents. Therefore, I'm in the market long, because if sellers were strong, they wouldn't have allowed that to happen. Hands down. So I don't care whatsoever about what these candles look like. I don't care if this is the strongest supply zone in the world, right? If sellers were strong, they wouldn't have allowed an RBI. Hands down. And the way it was bouncing off the 20, it was all I needed to see. That was literally it. I was like, dude, all right, let's go back let's reevaluate that 1 hour. All right, let's get in this long. So we hopped in long, and this trade was smooth. Over 140% on this trade. But I tell you what, guys, this thing gave me the biggest headache in the world. Like, when you're trading 0-day SPX calls, like, you're way above all-time high. I scaled up. I was trading a couple contracts. Like, the fluctuations were just kind of giving me a headache. And I'm not going to lie to you, I was trying to make a lot of money on this trade because of what happened to me earlier in the week. So I was trying to make up for a lot of that, which is usually a recipe for disaster. I don't recommend people doing that. But this trade ended up working out very well. But literally when it was done, I shut my computer down and I went and put an ice pack around my eyeballs because they hurt so bad because of like just the